Let's connect with Nadia El-Bilasi, market analyst at Equiti Group, and find out what's next in store. Nadia, great to have you with us. Now, inflation has risen in the US to a 40-year high. How do you think the markets are going to digest this? Because they must brace themselves for worse times to come, with the US now buckling down and going after inflation in a big way. More interest rate hikes and more aggressive hikes can be expected, can't they?
Yes, thank you, Vikram. Yes, of course, the effect of the high CPI figures is going to have, or is going to play a number on US stocks and also other assets. If we see the USD already, it reached levels of 114 and is going to even go higher based on the Fed in increasing interest rates. Now, the Fed will not hesitate to increase interest rates based on the CPI numbers. Even the core CPI that excludes food and energy has also risen to 0.6, which is definitely a high number. And now we have not even stepped below the 8%. So we're still at 8.2%, even higher than expected. So this is going to slow down the growth because of the aggressive tightening. It's going to play a huge number on US stocks, on businesses. It's going to hurt the economy. But we have been warned by Powell and we have been warned by the central bank that we can see a recession in the next year, or prospects at least of recession. So we're still going to see the economy look dim, or the outlook in general look dim in the next coming days.
Nadia, do tell us about crude prices. How much are they going to determine the severity of the oncoming global recession? Because already the International Energy Agency has said that with the production cuts that have been announced by OPEC Plus, we are looking at the world tilting into a recession.
Yes, so already OPEC Plus has already cut production by 2 million barrels. They also cut the production, they also cut the forecasts by 500,000. So that's a really big number. So we're going to see oil prices definitely correct on these terms, and but we already have less demand. So the cut production was based on the lower demand levels that we're seeing. So it's not really going to be a huge impact as we've seen, because these numbers are basically prioritized by OPEC Plus. So definitely we're going to see some ends there.
Always a pleasure chatting with you and getting your perspective. Nadia El-Bilasi joining us from the Equiti Group. Thanks very much for joining us on the Rush Hour.
Thanks.